Moving on to another story that we are watching this morning. China's economic growth coming in worse than expected. The country's second quarter GDP rose by 4.7% year on year. That's a miss on expectations of a 5.1% move. Yahoo Finance's Akiko Fujita has the details. Akiko.
Yeah, well, China's National Bureau of Statistics attributed the slowdown to short-term factors, including extreme weather. But this marked the fifth period of deflation in the second quarter. It is the longest decline we have seen in prices since 1999, according to Bloomberg. And the latest data comes at the start of a four-day meeting for the Communist Party. It is sure to raise questions about how President Xi plans to jumpstart the world's second largest economy. Now, to be sure, growth is continuing, but at a much slower pace than expected. We saw GDP expand at 4.7% in Q2 compared to the same period last year. Retail sales, a key metric here, saw it slow its monthly pace since December of 2022, with much of that driven by aggressive price cuts that we've been talking about a lot here. Everything from smartphones to cars, all those prices slashed there. China's property crisis has been the biggest drag on the broader economy for years, and we saw a reminder of that yet again with new home prices falling at the fastest pace in 9 years. The largest cities now seeing 13 straight months of declines. Fiscal stimulus has been fairly limited so far. We saw earlier this year China issuing ultra long-term special treasury bonds to spur spending and investments. Xi Jinping, though, has doubled down on manufacturing and the country's high-tech sectors, but that hasn't necessarily led to a big turnaround. Keep in mind, China has publicly stated it plans to reach 5% growth this year. There are growing doubts what that target is within reach, with the latest data prompting Goldman Sachs this morning to lower its growth forecast from 5% to 4.9%, saying more policy easing is necessary, especially on the fiscal and housing fronts.